Well, it's official. Rates just hit 5.99 on a 30-year fixed rate. It is well down from the 7.375 that we recently had just 60 days ago. So if you're saying, Dan, the Federal Reserve yesterday raised rates, didn't they? So where in the world are mortgage rates coming down? It would be a fantastic question if you ask that. So let's get over to and dig down into these numbers, okay? So what the Federal Reserve has been doing is they're trying to crush the markets. They're trying to drive down inflation. Basically, what is inflation? It's basically too much money chasing too few goods. That's basically what happens. You have all this money chasing just a finite number of items, and that's going to drive up the price to an equilibrium. That's how economics work. Okay? So, but what I want to get into, there's an intriguing piece of this puzzle I kind of found it yesterday in the transcripts. A lot of other people are finding it right now, and it just comes right here. So what you're seeing on your screen is basically a part of what Federal Chairman Powell said yesterday. And this intrigued me when I really dove into the numbers in the transcripts yesterday. But I think Wall Street's kind of figured it out last night, and now they're on the same bandwagon. So here it is right here. Powell says it's certainly possible federal funds rates stay below 5%. So if you read that, you're like, oh, okay, who cares? Well, that's interesting because right now we know the federal funds rate is 4.75. You can see that on your screen right through here. Okay. So if they're at 4.75 right now, and he's saying they probably won't go above 5, they're going to stay below 5. What does that mean? Well, at most, we have 0.25 left for the Federal Reserve to raise rates on. So he left it open saying, we're probably going to continue to raise rates. Well, he had to say that because if he comes in and says, hey, we're all done, no more inflation, and back to normal, the stock markets are going to rally, all prices are going to rally, people will feel comfortable, and they'll just keep spending. So they have to basically sound like they're bearish on the market, saying, keep raising rates because inflation's too far out of whack. Well, I want to give you some information on that front now. So let's get over to this. But I hope you understand the federal funds rate is the rate that the Federal Reserve controls. It's at 4.75 right now, and Federal Chairman Powell says probably isn't going to exceed 5. So that's where the markets are catching on. So let's get over to, though, the economic calendar for this week. And then I'm going to tie in some information in regards to inflation numbers that I think you're going to like. So the news for this week is basically this. The Federal Reserve has 2 mandates. It's full employment and price stability, aka inflation. And we had a slew of that information this week. We had on Wednesday, we had the ADP payroll numbers. It came in dismal. The last reading, how many people got new jobs? For 250,000 people. Glasses on so I can read the numbers accurately. 253,000 people got new jobs. They said, well, we expect for this week, 178,000 people get new jobs. Well, it only came in at 106,000. A dismal number, less than half, more than half of where we were last month. So the job numbers are starting to really come back down. Okay, but here's the intriguing part. When you always hear them say, well, the job market is just, unraveled right now. Well, here's what he means. There's 11, this number right here, the JOLT index, that tells us how many job openings there are. Okay, there's 11 million job openings. That's 1.9 job openings for every person looking. So the job market it's basically disconnected right now. There's a ton of jobs out there, but people aren't taking them. And the situation is, what's happening? And nobody could put their finger on this one. Okay, but let's continue down through. Crude oil prices, huge number. Our inventory previously was 0.53 million barrels. Now we're at 4.1 million barrels. Why is gas prices keep going up and up and up and up and up? Well, check out a lot of the oil refineries and oil companies, their profits. Q4, they blew out the numbers, record numbers. But maybe this needs to be looked at by the government or somebody put that under control. Then you have the FOMC meetings. They came out and said what I said earlier. He said all this mumbo jumbo, but then his biggest piece of the puzzle was right here when he started talking about the federal funds rate. So now let's get into the inflation numbers. Okay, here's where I have some intriguing numbers for you. If you look at some of the biggest components when it comes to inflation, let's look at oil. Let's go to a year chart on oil. So if we go to that chart, we see last year oil was 120. Let's see right through here. It was $122 a barrel in this area here. $123 a barrel back in March of last year. Where are we now? 76. about half, maybe. I know it's not quite half, but it's about half. The next component of this, let's go over to copper prices. Look at where copper prices have been and have gone. We have copper prices right here. Let's just go back to, I don't know, let's take back in March again. March, $4 and about $5 an ounce. What do we see now? $4 an ounce. A huge drop. Let's keep going. The next piece of this puzzle is lumber. Look where lumber is. You go through this, and lumber back in March of last year was $1,464. I know it's not a bundle, but bear with me on this one. $1,464 a bundle, let's just say. Now it's $500, so it's down 2/3. Let's see rents. Rents decreased 1.4% from November to December, the steepest decline in rents since month-over-month basis. In September, when the slide began, prices were down nearly 2.5%. So let's put a lot of these into context. We have the last piece of the puzzle, I forgot this one, is hourly wages. So hourly wages are really sticky, and this is a big part of the economy, but it's starting to come down as well. You can see it by this chart. So we have raw materials of everything. Unit labor costs going down, oil going down. Everything is going down at least probably about 50%. So the expectations are inflation is coming down. Unfortunately, what the Federal Reserve watches is they watch numbers from a year ago. They don't fill in the gap of what's happened month over month and quarter after quarter. They look at year over year. Bad way to look at it because you're going to overshoot, and that's what they normally do. So what I expect, and a lot of the markets are expecting, the Federal Reserve might have one more rate increase in their arsenal, probably 25 basis points, plus a federal funds rate up to 5%. What the Federal Chairman Powell says, it probably won't go below or won't, it might not peak over 5%. It didn't say 5%. We'll probably see the federal funds rate move to 5%. So the Federal Reserve will raise rates another 0.25%. Then they're probably going to be done. From there on, as long as they give us good guidance, you're going to start seeing the market stabilize. One other piece of the market that a lot of people don't understand is during the COVID pandemic, all that stuff that was going on, the Federal Reserve actually stepped in and manipulated mortgage prices. And here's what they did. They stepped in and they bought mortgage-backed securities in the tune of $40 billion a month. $40 billion a month of an asset that they're buying. What happened to that asset? Well, the price of that asset kept going up and up and up and up. And that is called a mortgage-backed security. So we're seeing right now mortgage-backed securities are up 13. What have I always taught you on what happens with mortgage-backed securities when the prices go up? Well, it has an inverse relationship on rates. So interest rates will come down, okay? So what we saw during the pandemic is the Federal Reserve kept buying in the tune of $40 billion a month. That was called quantitative easing. They were trying to ease the markets, lower rates. So they were buying up mortgage products, driving up the prices in record low mortgage rates. Okay. Last year, at the end of last year, they stopped buying. We saw mortgage rates tick up substantially. And then what happened is they started to sell mortgage-backed securities around October. What happened in November? Well, we hit a record high in rates that we haven't seen in decades. Right here, 7.375. Since then, however, rates have dropped all the way back down to 5.99%, what I predicted back in December. We would see rates starting to stabilize, starting to come back down. But this quantitative tightening that they're doing is actually increasing, and I read a study last night. It actually is increasing mortgage rates, they're saying, by 2 percentage points because they're flooding the market with mortgage-backed securities. So we have now too much mortgage-backed security bonds in the market. Thus, there's no liquidity. The prices are plummeting and rates are going up. Okay, so that's what we've seen, and that's what some of these things are taking place. Since November, though, the market has been absorbing those bonds, and rates have been coming down because of they're still selling the bonds, but there's a lot of other dynamics behind everything, especially with the Federal Reserve doing and everything else, that's curtailing or bringing back down rates. So in a nutshell, what's going on is the Federal Reserve, they're pleased with what they've done. They've been able to start bringing down inflation quite a bit, and you're going to see these numbers start to subside quite a bit in the next 30, 60, 90 days, where I think the Federal Reserve will have enough ammo in their arsenal to basically take their foot off the gas pedal of raising rates, and they're going to just sit on the sidelines for a few months. And then, what my expectations are, we're going to have a pivot. They still say they're not going to pivot, but they said back in 2020 and 2021, they had no expectations of raising interest rates until 2023. This is from the Fed. What happened in 2022? We had, I think, 6 rate increases by the Fed, an unprecedented level of rate increases to a number we haven't seen in a long. So basically, that's what's going on with inflation. That's what's going on with Fed. I still have my prediction of, I think rates are going to be about 5.5% to 6% for this year. I think housing is going to be stable in some areas. Some areas are going to get hit more than others. But overall, I can see, some markets taking a 10% haircut, meaning 10% reduction in prices. But if you sat in my chair for a week, you see that the strength in the housing market is still there. We have buyers on a daily basis putting in applications and submitting contracts, and we might have actually a record February. So that being said, if you're out there and you want to kick the tires and see how much can I get pre-approved for? Can I qualify for a home? Is it investment property in my cards? Well, if you want to find out more about how we can help you, all you need to do is go to therateupdate.com. And here we are. Best way to people usually find us is they'll give us a call, which you can do right over here. You can't see that. My apologies. It's 844-775-5626. Or how we'd love to do this, we book a meeting with you. It's right up here. What we're going to do is we'll spend a half hour with you on Zoom or on the phone. We're going to go through all your questions, all your concerns. And when you're done, who knows, you might be pre-approved to buy that dream house of yours. So thanks for watching, guys. If you find value in my channel, please, 3 big favors. Give me a thumbs up, subscribe down below. Every time I post a video, you get an alert. Thanks for watching, guys. God bless. See you soon.